Welcome to Stay Focused, and thank you for joining us. I'm Kelvin Law. Our topic is real estate trends. My guest is Christopher Fleser with Movement Mortgage. Christopher is a senior loan officer who specializes in residential lending for 16 years, and he is here today to share his expertise with us. Thank you, Chris, for being here.
Calvin, thank you for inviting me.
Welcome.
Thank you.
I'm glad you can join me.
Thank you.
So
glad
great.
I was able to as well.
Thank you. So, what do you think of the current residential lending market right now, as we speak in October of 2020, and what do you foresee in 2021 as well?
Wow, those are great questions. Well, happy October 1st. It is the start of the fourth quarter. With the residential real estate market, it is on fire, as you can probably attest to, Calvin.
Yes, it is.
There is more demand than there is inventory. On the mortgage side, rates are still extremely low, and it's a fantastic opportunity to go through whether you're purchasing or refinancing. As far as rates, and for the rest of 2020, it's going to be tough to say. We're probably going to have some ups and downs, but I would say we're still going to be in the range of, let's just say 3 to 4%, which is still fantastic, extremely low. And for 2021, they're still forecasting that those rates will be somewhere in there, in that range. So it's a great opportunity to buy.
Yes, I agree with you as well, because as we all know, this is seller's market, and with low in supply and high demand of housing. There are open houses within 1 or 2 days. Then basically properties with decent condition, good location, and price right, they get sold pretty much like 1 or 2 days. And there have been multiple biddings everywhere as well. So people nowadays, as you know, have attempt to refinance their homes. That will prolong their need to put the property on the market for sale. So that pretty much drives up, the value of the properties, and also drive up the demand for housing as well. And especially, with the pandemic, college kids and also kids who go to college, and they tend to want to stay home a little bit longer. So basically things, pretty much like steady a little bit until things will go back to normal. So that's why, as I can see, between 2020 and 2021, it's going to be still the seller's market. So that's important to know, I think.
I agree with you. And I think that is one of the downsides of the current market right now with the interest rates is average time is 5 to 7 years from somebody buying a home and either selling, moving up, downsizing.
Yes.
With the rates the way they are, you're right. Inventory will continue to be in a very low supply if people are choosing to stay in their homes longer.
Right, and a lot of people are pretty much like priced themselves out of the market, especially areas that away from Boston, about 20 to 30 minutes drive, to Boston. And so a lot of people go to outskirts, towns like Weymouth, Eppington, even they move up to Maine or New Hampshire, if you will, because they got priced out of the market. So the market is pretty strong, even though based on what we have to deal with right now. So my first question is for you, what is the typical procedure for getting a pre-approval letter?
It's a great question, Calvin, so thank you. Typically, we like to go through and have a conversation with the borrower. It's going to start either via an introduction from the realtor, a friend, however they start out, and it's what I call an interview process. My view of the mortgage is it's a tool to help you with your financial plan, right? You are going through and making the largest purchase of your life. It's not something to take lightly. But at the end of the day, you're creating wealth. Not only for yourself, but for your family, because you're buying a home. I am just what I call that middleman. So it starts out with an interview process, finding out a little bit about you. You a W-2 wage earner? Are you self-employed? Where do you see yourself? Maybe you're single. Okay, great. So is this going to be a starter home, and are you looking to keep it to rent in the future? Or are you looking to take those proceeds and buy another home? Typically, it's life events that encourage somebody to go through and purchase. So where do you see yourself in 5 to 7 years? After that, we'll go through, take a loan application, find the 1 or 2, hopefully even 3 mortgage programs that they qualify for, issue the pre-approval letter, and let them go out and shop for a home. Because once they have found their purchase price that they can afford comfortably and not eat ramen noodles, because we want them living in the home and not for the home, they can go out and begin looking in earnest. It's kind of like buying a new car, right? You go through and you buy that beautiful Toyota Corolla, whatever it may be, and all of a sudden you start seeing all these other Toyota Corollas. So once they have that figure, they can now go out and go to you, Calvin, and go, I'm pre-approved for $400,000 to $450,000. Let's take a look in that range and see what's available. And then they can narrow that search to find their dream home with you, because you're going to help them find that physical aspect.
Yes, yeah, that's a good point, because as I keep mentioning to all the potential buyers out there, is that you don't want to stretch it. When you buy a home, you want to enjoy the home itself, and also with the family as well. Instead of just, be the slave of the bank, if you will. So
We don't want that either.
so that's important to know. As we talk about it, we as professionals, we have to be like the heart of a teacher. So we have to teach, we have to share our expertise, and we have to be, their advocate as well. When it comes to real estate, either for sellers and buyers. So that's important to know as a professional. With that being said, I've seen some pre-qualification letters out there until nowadays. So I know pre-approval letter are much popular nowadays. So can you explain what is the difference between a pre-approval letter versus a pre-qualification letter?
Calvin, that's a great question.
Thank you.
So how I would define a pre-qualification is, Calvin, you'd call me up and say, Chris, my name is Calvin Law. I like to go through and find out how much I can buy, what I can afford. Okay, so I take your information, you say you make $100,000 a year, I pull your credit, you tell me that you have $50,000 in the bank, and I say, okay, here you go. But what didn't I ask you? I didn't ask you if you're self-employed. I didn't ask you if you're W-2. Do you get paid overtime? What type of work do you do? And I didn't ask to verify that information. With a pre-approval, that information is going to get verified. Now, the borrower does not have to provide that in order to issue the letter, but it is recommended, right? So it's trust but verify, to make sure that everything they state is true. And I'll give you an example. I've had some clients that have gone through and said, yeah, I make this in bonus. Okay. They've gone through, and then when they had the documents come through, the bonus was structured a little differently, and we really couldn't use it because it came out as a commission versus a bonus, and they weren't a commission employee. So it's just understanding that so that you can understand the programs and the guidelines that would become available to them. So once it's verified, we can underwrite it through an automated underwriting system, and as a loan officer, we can issue that pre-approval. If we need to, if you're self-employed, we can go through and get that to an underwriter to verify everything as well, so that it's a true pre-approval. Because with the self-employed, that income is the key.
So basically, in summary, between the pre-approval versus the pre-qualification. So with the pre-approval, it's just more extended vetting process.
Correct.
Versus the pre-qualification letter.
Correct.
So, so the next point is, why are credit scores so important during the vetting process?
Wow. Throw me some hard ones, huh? All right.
You're the pro.
Credit is important because it goes through and it shows your ability to manage a budget, if I wanted to break it down in a nutshell. I've been doing a lot of teaching some first-time home buyer courses, and I think the greatest explanation I had for it was a credit score tells us the likelihood that you will have a 90-day late, meaning trouble paying your bills, in a 24-month period. So the higher the score, it means you've learned how to manage your money. The lower the score, it means you're going through and trying to have a balancing act. So remember, we're lending you hundreds of thousands of dollars. The bank doesn't want that property back. We don't want to be, no mortgage lender wants to own that property. We want to make sure that you can afford it. Things do happen. Health, accidents. So credit scores are a reflection of in time, kind of like a financial report that are going to be coming out with all our public companies, right? It's a snapshot. Here's Q3. Here's the end of Q3. Well, here's the end of September. Well, it's September. You racked up $30,000 worth of debt. Let's say you just paid it all off. I'm not going to see that till November. So it is important to have a great score because it will help improve the debt to income, the qualifying, and getting a better rate. So the higher the score, the better rate you're going to receive as well.
Well, that's a good point. So we are talking with Christopher Fleser at Movement Mortgage. So in terms of employment, how come it is so important not to have any lapses between job to job? So basically, why is it important to have a continuous employment during the home buying process?
So it's important because your income is what we're basing the decision on. Will that income support the mortgage payment, the principal, the interest, the taxes, the insurance, plus your other debts? So your car payment, any other credit card debt, etc. So if you lose your job, how are you going to make the payment? Question I always get asked is, especially with a lot of people, they say, well, I'm in transition. Okay, well, what do you mean by transition? Are you going from being, and I'll use myself, as a mortgage loan officer to being another mortgage loan officer? Or are you going from being a mortgage loan officer to now real estate, which is something you've never done before? If it's a lateral transfer, we should be fine. If it's something to real estate, well, now you don't have a history of making money in that profession. So we're unsure what will happen. So you always want to make sure that you're employed, you stay within the same profession. If you do change professions, as the mortgage loan officer, let us know, because it can affect what we can do for you.
So basically, it has to do with security of employment as well.
Yes.
And stability as well. So, so with the crazy market right now, what type of loans that are popular for buyers right now? That including experienced buyers and first-time home buyers.
Great question. I mean, it runs the gambit, Calvin. Most of the time, what I'm seeing is what I'll call conventional. You've got great credit, great income, money to put down. So you're getting a conventional mortgage, which is a conventional mortgage is a loan that is offered by Fannie Mae or Freddie Mac and can go up to $690,000. That will be purchased conventionally. But you also have FHA. So FHA may be for somebody that maybe had some credit issues in the past, or there's a debt that's outstanding, a collection that's not going to meet the conventional guidelines. For those that are maybe buying in the outskirts, could be a USDA loan. They may qualify for that because it's in a rural area. And then we can't forget about our veterans. So you have your VA loans. So in sitting down and interviewing the person, finding out what they're looking for and figuring out which program can best be utilized. Now let's not forget about jumbo loans. I mean, you've got the towns like Hingham, Cohasset. I'd even say Hanson and Pembroke are getting up there as far as some of the purchase prices and the sales prices. Those are still extremely competitive at this point as well. So there's always programs available to meet the needs of the client and what they desire.
Right. So with buyers who have less than 20% down payment, let's say they plan to put down between 10 to 50% as down payment for a home. What is PMI?
Ah, that dreaded word, private mortgage insurance.
Make it work, I guess.
And it is dreaded. So private mortgage insurance, to explain it simply, it's insurance that the buyer pays for, that if something were to happen, the insurance company is basically going to pay the loan off for us as the mortgage company. So it's an insurance policy. But what it does allow is it allows you to go through and put less money down, purchase that home, not having the 20%. You can get rid of it. So it's not a bad thing. And actually, previous to, this is what 2020, into 2019, I was recommending to my clients to go ahead and get private mortgage insurance instead of getting 20% down. Looking ahead at what the markets were going to do as far as interest rates, it let them keep their cash. And then we financed them, got them a lower interest rate, saved them money that way, and they had that cash as a cushion in case something happened. So it's not a dreaded word, it's a great tool, but I do get asked that question quite a lot of, do I need PMI, should I? And go through and we'll show them. And at the end of the day, it's still the client's option whether or not they want to take it. But again, it's not a dreaded word.
It's not too bad, isn't it? So, yeah. So especially for buyers who want to save up some cash and try to renovate the property after they, owned it. So, I mean, PMI could be another option to look into it. So, yeah, because a lot of people don't have that much cash in terms of, buying a home. So that's why the PMI could be another option for them to save some cash and, fix up the house afterwards. So,
correct.
Yeah. And last question is that this is very important. We all see this in the purchase and sale agreement. It's called commitment letter. What is a commitment letter?
The commitment letter. All right. How do I put this? Well, I'll give an example. I have a client that I'm working with that recently got married. So I kind of put it this way. So your offer is kind of like you're dating, right? You get to the offer, they say yes. You've got your 10 days that lead up to everything, and then you get to your purchase and sale, which is kind of like putting the ring on the finger. You apply, you go through everything. We do all our work in the background because, again, you've got a team and you don't see a lot of the stuff that we do, but there's title, appraisal, we get all that stuff done. The commitment letter is what I equate to having, what's the pre-rehearsal dinner, okay? So it means that you have done all your obligations, appraisals come in, meets the value. Titles come in and there's clear title. You've provided us all the documentation, and we're basically saying, yes, you're done. You can set your celebration day and go get the keys to your home.
Right. So that's when the marriage begins, I guess, huh?
That's a yes.
That's good. So yeah, that's the best way to put it, So yeah, 3 different phases, right? So yeah. Well, I want to thank you so much for being here, and thank you so much for making a difference by sharing your expertise with the consumers. So thank you.
Calvin, thank you, and I appreciate you offering me this opportunity to come and speak and share my expertise with everybody, and look forward to doing it again in the future.
Sure, I'd love to have you on as well in the future. So with that being said, as the first-time home buyer or an experienced home buyer, it is important to take the first step of getting yourself pre-approved before looking at any properties. There are a couple benefits to have a pre-approval letter in hand. Number one, knowing the closing costs. Number two, the type of loan programs that you will qualify for, and your estimated payment, your market interest rate, and the last thing is how much down payment that you need towards the purchase as well. I hope you find the information helpful, and I hope to see you next time. Thank you so much for watching again.